Hello, guys. How are we doing? Just had a couple technical issues. I just want to make sure, can you all hear me and see me okay? And then we'll go ahead and get started. Perfect, cool. All right, guys, obviously excited to be here tonight. Excited to get on with this webinar. So tonight's webinar is obviously going to be on how to actually spot high probability supply and demand zones, how to enter from them, when to enter from them, all this type of good stuff. And by the end of tonight, I'm going to give you one clean, repeatable model that you can take away, backtest using the live markets, whatever it may be, that you can go away with a base today, right? Now, what I'm going to do is break this obviously down step by step. And as I say, then we're going to have a full back testing session after. Now you can use this. Well, I'll go into it a little bit more after, but let's go ahead and get into it. So the first things first that I want to go through is I'm just going to pull up this as well so I can show you guys some examples on here. Okay, so first things first is going into this model. Now, supply and demand in this sense that we're going to be covering today is going to be built around market structure. And before you can trade any setup with any kind of consistency, you have to understand market structure. Market structure is like the language of price. It tells you who's in control, where liquidity sits, and where the next move is likely to unfold. So every single chart, no matter the time frame, moves through a repeating sequence, higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend. And the moment this sequence breaks, control shifts from one side to the other of the market. Now, that is what we're going to be utilizing today to sort of spot and enter with these supply and demand zones. So, for example, when price breaks the previous swing high, it confirms bullish order flow. When price breaks a swing low, it confirms bearish order flow, right? These breaks of structure, as you can kind of see from the diagram that I've illustrated for you here. So we've got higher highs, higher lows, higher highs, higher lows, and I've marked out the break of structures here. Right? And you can see here, this is the impulse leg. And at the bottom of each one of these impulse legs is a demand zone in an uptrend or a supply zone in a downtrend. And these breaks of structure are the foundation of everything. They tell us when institutions are expanding price in one direction and when they're taking profit or accumulating for the next move. So in between these impulse legs, price consolidates. That's first where liquidity builds. Those ranges the base for the next expansion. So when we identify market structure correctly, we're not guessing in trend direction anymore. We're literally mapping out the footprints of institutional behaviors. And this is where it all connects. Supply and demand tells us where price is likely to react, and market structure tells us when it's ready to move. So once you can read structure in real time, higher highs, higher lows, and those clean breaks of structure, you'll stop forcing those trades and start aligning with what the market is actually doing. So as I say, I just want to run through these charts. So this is obviously, as you can see here, higher highs, higher lows, and simple basic sort of market structure here. So just to kind of draw this out for you, right? I think the majority of us can kind of tell, you know, this would be market structure, right? Higher highs, higher lows. Then all of a sudden we swap and then we make higher highs, higher lows, right? Does that make sense to everyone? Does everyone so far in here have a basic understanding of market structure? Because if not, I will go into that a little bit deeper. But before I move forward, I just need to make sure that everyone understands the basics of market structure. Yes, perfect. Awesome. So I understood that most of you would. Now, this is a bearish example here. Okay. So in a bearish example, as you can see, we've got a low, then we've got a high, then we break structure down here. Then we have a lower low to a lower high, a lower low to a lower high. And as you can see, after each one of these impulse legs, so these sharp moves down where this displacement happens, or the aggression between the sellers in this scenario happens, you can see that at the top of each one of these is the area of supply. This is where the institution stepped in and pushed the price aggressively to the downside to then break structure. And just to kind of show you a chart example of this, I actually just before pulled this up from an actual like market. You can go, this is the pound to the dollar chart. And I went ahead and just pulled this straight from there. And you can see this is how it's actually been working recently, right? So we had our area of supply here. We broke structure. We retested this area of supply. We pushed down. We broke structure again. Then we create this new area of supply again. which then caused us to break structure. We retested it, we sold off, we broke structure. Now we've created this another area of supply here, which we would then anticipate price to trade towards, right? So I see in this as well, it can be very easy to sort of overanalyze and overcomplicate supply and demand. Because here, for example, if I were to define to you the supply and demand and how to draw them, it would essentially be as simple as, if you're bearish, it would be the bullish candle or the bullish set of candles before a bearish move down that breaks structure. So this is the last bullish candle here before the bearish move down that breaks structure. All right. Here, this is the last bullish move candle before the bearish move down that breaks structure. This here as well would be an area of supply. This is the last bullish candle before a bearish move down that breaks structure. Here, this is the last bullish candle before a bearish move down that breaks structures. Sort of like order blocks. Yes, exactly like order blocks, right? Supply and demand, order blocks is essentially just another name for supply and demand. So they are almost identical. So if you know how to do order blocks, you know how to do supply and demand. And just to kind of go onto a live chart here, I can mark some out for you just so we can spot them a little bit easier, right? So for example, gold, if we were looking at this right here would be an area of demand, okay? This right here would be an area of supply. This right here would be an area of supply. This right here would be an area of demand. This right here would be an area of demand. Does that make sense to everyone? This right here would be an area of demand. This right here, an area of demand. And that is just kind of the simplest way to kind of spot and draw out supply and demand. Makes it very easy to do. But as we can see, there's loads and loads and loads of these candles, right? So not all of these supply and demand. So no, there is a way to filter between a high probability area of supply and demand and a low probability of supply and demand. So what I'm going to do now is explain to you what are high probability and low probability areas and how do we validate them. So the first things first, right? This is essentially supply and demand. The last bearish candle before a sharp move upward, or the last bullish candle before a sharp move downward, as I've just explained, right? Now, what also is required to have a high probability supply and demand level? If price sweeps the low of the previous candle, so as you can see here, right? So I've taken this obviously from order blocks, right? As you can see, is literally the same thing. But as you can see here, right? This candle right here gets swept this low, right? And then the move happens. That is a higher probability order block. If this candle here doesn't get taken out and the last candle that sort of gets put in isn't the sweep, then this is a lower probability order block. So can you see here how this wick on the left gets taken out? Then the order block or area of demand gets put in. Whereas this wick here on the right doesn't get taken out and then this area of demand gets put in. Okay, this here would be considerably lower probability because the market likely wants to come down and resweep this low before then moving higher. Okay, so that's step one. That's how we validated step one. There's 4 steps to this. Step 2, we need an imbalance or an inefficiency before the area of the supply or demand. So here, right, for example, this is our area of demand, this red candle right here that you can see colored in gray. Before this, we have a gap, right? This is an imbalance in price. This shows us that the buyers in this case were in control. And because of that, it formed this gap, okay? We formed this gap because there was an imbalance between buyers and sellers. And the buyers were so much in control that the sellers here couldn't actually have time to basically make this market efficient. So forming this gap. So that is also what makes this higher probability. Someone's asking also what time frame. This works on every single time frame, right? And I'm going to show you how price is fractal in our backtesting session. So don't worry if you're at any point confused, because after this, we're going to do this is just a quick intro, explain the basics to you, and then we're going to do a full sort of 1 hour, 45-minute backtesting session, and you can see all these trades taken step by step, okay? The next one, break of structure, as I said. For it to be a valid area of supply and demand, right, we need a breakage structure. So let's put 1, 2, 3 together now, right? The area of demand here took out this low. We then formed a fair value gap or an imbalance here in price. So 1, 2, and it broke structure. That now makes this an extremely high probability area of demand. Same thing here, right? We took out this low, we form this gap, and we also break structure. If price then were to now retrade back to this area of demand, we would consider this an extremely high probability area of demand. And finally, the last thing that makes a really, really high probability area of supply and demand is inducement or liquidity before that, right? So if we can have some kind of buildup of orders or some kind of wick here, or potentially even another area of supply and demand right here, then that increases the probability, but exponentially, right? Because then that means that price is coming back, takes out all of these orders or all of these early sellers, taps into our area of supply, and then we get the aggressive move. So we want 1, 2, 3. We want it to sweep the last candle. We want a gap to get formed. We want a break of structure. And then we also want this inducement to form. And as I say, I will walk you through all of this step by step on a backtesting session, and we'll take a bunch of trades live together in backtesting, okay? So do not worry if you're confused. And here is some examples of that, okay? So here we can see a strong move down that caused this break of structure. The candle, the body candle, closed below this low, confirming a break of structure. Then we had this buildup of inducement right here, okay? Right? So we had inducement, liquidity buildup with these wicks. We formed this imbalance right here. You see this gap right here, okay? This level of imbalance. Then we tapped into it and we had the sharp move down. Then this now becomes our new supply that's in control, because this is now the move that pushed down. Then we form this inducement and this liquidity here. We accumulate, we chop around, we quickly move back up to the area of supply. Then we have the strong sell-off again. And now this little area here would be the next area in control. Random time backtest or replay. Random time backtest, okay? We always do it here. We always do random time backtests. I always get some kind of question saying, oh, can we do it like you pre-plan it, or can we do it random? So today I've decided to do a little mixture of both. All right. And you'll see what I mean by that in a second. So how do we enter these zones when price taps into them? The first way is order flow, footprint charts, bookmap, that type of thing, right? That is the first way that you can obviously go ahead and enter and confirm your entries at these zones. These zones that I'm talking about today are essentially POIs. So these are points of interest where we know that the price is likely to reverse or make some kind of sharp move, right? Now, as we are backtesting today, unfortunately, we cannot backtest order flow. So what we are going to be using is market structure shifts or engulfing candles. And what do I mean by that? Simple market structures is what I mean is, like using market structure on the lower time frame. So basically using the exact same stuff we've just looked at, but using that on the lower time frame, as I say, price is fractal. So here are going to be some of our entries that we're going to be using. And as I say, it's just simple market structure shift, retest into a fair value gap or an area of supply and demand, and then we'll look for the continuation sell-off. But as I say, do not worry, I'll walk you through all of this step by step on each one, right? Now, time frame pairing for this, okay? If we're using a 15-minute level of supply and demand, we would only want to look for confirmation on the 1 minute. If we're using a 1 hour level, we only want to look for confirmation on the 5 minute time frame. And if we're using a 4 hour level, we only want to look for confirmation on the 15-minute time frame. And during the session, you're going to see how important that actually is to sort of refine, increase your win rate, make sure it's as high as possible, and avoid you taking as many losses as possible. All right. Now, as I say, if I could obviously do this with order flow or anything like that, I would show you that side as well. But sadly, we cannot backtest that. Okay. So I can see a couple of questions about fair value gaps and what they are. So I'm just going to really quickly draw out a couple on this chart for you before we go ahead and get started so that everyone is familiar and understands them. I'm sure the majority of you are, but nevertheless. So what essentially it is, it's a gap in the market where almost like in a 3 candle pattern. So 1, 2, 3, where the wicks of the candles don't touch. So this, for example, would be a gap or an imbalance. You see how the wicks here don't touch and there's this gap in between. This right here would be an imbalance or a fair value gap just because the wicks here don't touch and we have this void. We have this gap between these candles in the market. This right here would be a gap. This right here, you see this bigger void here where the wicks don't touch would be a gap. This gap right here where the wicks don't touch and we have this void would be a gap, okay? This right here would be a gap where the wicks don't touch and we have this void, okay? This larger one right here, see this big gap and the wicks don't touch? This is a level of imbalance. This shows to us that the sellers were quite obviously in control here, right? And we form this gap, and this would be how we form that. Okay, cool. Inducement is new for you. Do not worry. I'll explain it step by step during our backtesting session. But what I've gone ahead and done is normally what we do on these backtesting sessions is we actually create the session together. I let you guys pick the date. I let you guys, pick the pair that we trade. But often I sort of get complaints that you guys kind of want these things to more so be like I show you some examples first and then we kind of go on to that after. So what I've done is I've just marked up like the first 2 days here. I just traded them already, right? And this is on GBP USD, but I want to clarify this does work on absolutely anything. It works on NQ, it works on ES, it works on stocks, it works on gold, it works on whatever it does. And if you guys want ahead and go and check out TradeZella University, we have done backtesting sessions, or inside the TradeZella Discord even, we do a backtesting session every week, and we've done all sorts of different various pairs on this in the past. But let me just walk you through the first couple trades here, and then we'll go on to just kind of live spontaneous backtesting, and you can see my thought process, and I can explain it all to you step by step. Okay. So let's go ahead and dive into this. So first things first, when I jumped onto this chart, what did I see? Okay, so I jumped onto this chart about 20 minutes ago and I just set the session up. And I noticed on the higher time frame, right, we had this 4-hour area of supply and demand. Let me just go and refresh the page here because I've had this open for a while, right? I saw this area of 4-hour supply demand down here, and I saw this 4-hour area of supply, right? Kind of just as we spoke about this bullish candle before the strong move down that break structure. So this broke out between these lows, right? And that was our breaker structure, okay? Then I also saw this area of demand, and this was the bearish candle before the strong move up that broke structure, okay? So this broke out that structure. So that is our 2 higher time frame areas. Now we are kind of in the middle of this zone. So what I'm kind of leaning towards is price to either trade down to here or price to trade up to here. So I dropped onto the lower time frame here. And what did I notice? Okay. So I was on the 15-minute. I noticed that we had a strong breaker structure here. Now, what is the candle, the last bullish candle that caused this move down? Okay. It's this one right here, this bullish candle right here, or even this collective, you can include this one as well, that caused this break of structure. So we had that break of structure, and what's right before that candle, right, is this imbalance here. You can see this gap, okay? So there's step 1, there's step 2, okay? So that validates our area. So we've got 1, 2, 3. What also did this candle do? It took out the previous candle's high. So there's step 4. All right, so then that makes this now a higher probability area. What do we also have down here? We have stacked orders, all of this liquidity, okay? So this is a potential target for us. And then this high here, where we have this area of supply, right? This area of supply is for people that essentially kind of got into the market a little bit early. They haven't watched this webinar. They don't quite understand supply and demand properly. So this is our inducement, okay? This is where early sellers get into the market, and they obviously get wrecked here, and then we get the sell-off, right? So as I say, I'll cover inducement more and more as we go in. So what happens here? I go onto the lower time frame, and because this is a 15-minute area, I want to use a 1 minute for my entry, okay? So we had a market structure shift here. Now, as I say, if I could use footprint charts, order flow, or anything like that, I would show you guys that. But as we can only backtest, I'm simply going to be showing you market structure shifts and entries of fair value gaps and other supply and demand areas, okay? So I saw this market structure shift, the body of the candle closed below this low. So now what does that tell me? Okay, so I go onto the 2 minute and I see an actual area of supply here. So I'm like, okay, right, price is fractal. What works on the higher time frame works on the lower time frame. So I set my entry limit at this 2 minute area, my stop loss above the high, and I go ahead and I target down at these lows. Now, what happens to me there? All right, my trade, this first trade here actually fails, right? Now, I probably get taken out break even on this. And because it fails is what actually happens is it taps into a 5-minute area of demand here, okay? So price comes down, taps into this area of demand, and then we proceed to go higher. The market isn't ready, right, to obviously turn yet. So no worries. I get taken out of break even. I get stopped out there, right? No strategy is perfect. You're never going to have a 100% win rate. So then what happens is we end up building up this liquidity here with these highs, and this now ends up being my inducement. I'm still inside this 15-minute gap, this 15-minute area of supply. So this is still valid until price actually closes back above this. The sellers or this supply is still in control. So once that does happen, I can still look for a valid re-entry, right? And if I just now go back onto the lower time frame, what do I see here? Okay, so I have my little market structure shift here. All right, I have my market structure shift. Okay, and then what do I see gets formed? A new area of supply. So I set my entry there, my stop loss above the high, and then we finally get the follow through on this, which you could ride all the way down to these lows. Okay, so those are the first two trades that I kind of noticed. And then following on to that, right, what happened down here? Okay, I realized that the buyers at this point were in control. Now, why did I realize that? So what happened here was this low had a break of structure. And I'm just going to go ahead and draw this on for you. All right, this low here had a break of structure. So that would mean that this is now our area of supply. But this area of supply doesn't hold. We actually end up flip bullish. So now what's happened? Here we've had our market structure shift. Now the buyers are in control. Okay, does that make sense to everyone? Now the buyers are in control of this market, and instead of us now being bearish, we're now bullish on the 15-minute time frame. However, I'm still looking at this as maybe possibly some inducement here. So this area right here that you can see, this area of supply is where I'm looking to sell from and possibly continue the overall higher time frame market structure. So lower low, lower high, lower low, lower high, lower low, right? That's kind of my plan that I'm looking at. But then what happens here? I jump onto the 1 minute, right? I look for my entry, get a breaker structure here. This ends up being my entry here, and then it ends up pushing down, but then I get completely stopped out. And from here, we will just be trading live and kind of just going through the thought process, and you can watch what I do and I don't know, like kind of how I figure things out as we go. So I hope this is obviously some good examples to show you. I want to obviously show you what, whatever came here, win or loss, right? But what ends up happening here is we actually come back down. We respect this area of demand here. You see this area of demand, right? The bearish candle before a break of structure that ends up pushing up. So what's this here? This is strong bullish candle that ends up breaking above this high, further confirming our bullish momentum. So now we know that price is bullish from here, okay? So let's carry it on and see what we've got. Now, going on to the 15-minute time frame, what do I see? Now, I do have, I'm just going to go ahead and delete all this stuff off the chart now, and we're going to go and sort of start fresh. So now I know that this is probably a sweep down here. And as I say, I'm just going to start fresh here and delete all of this off. But if anyone is unsure on anything, please let me know and we will go ahead and cover it. So my bias in this sense is bullish, right? And it's probably going to be bullish until we kind of come to take out these highs, or possibly even further up to these highs up here, or maybe run up to this 4-hour area of supply, okay? Now, I see this area of 15-minute demand here, right? Now, this is kind of what I believe to be in control. However, before this, there's no fair value gap. There's no imbalance, right? It's not right before the candle. The only fair value gap I can see here or imbalance is right here. So this isn't valid. So let me cycle through the time frames. Okay, right? There's a 30-minute one here. But again, no sort of, void, no fair value gap there. So that also isn't valid. Okay, let's go on the 1 hour. Okay, perfect, right? Here on the 1 hour, I do see now that there is a fair value gap before this, okay? So right here, I'm going to go ahead and draw this as my demand, right? So here, right, these two candles right here, these two bearish candles are my demand. So it can be the consecutive candles before the bullish move up, right? You can refine it and just go to one, but you might sometimes miss your entry. So I'd recommend just doing the consecutive candles here. Now, what's this? This could be my inducement, okay? This could be my early buyers, okay? So I've got 1, 2, 3. Now let's have a look, right? So can price get back to here? Okay, so price does this really aggressive move up, further confirming my bullish bias here because we broke out above this high, okay? So now can we kind of get an entry around here? So let's drop into the lower time frame and see if we get a tap into this zone, and I'll show you a market structure shift if one presents. Okay. So the other way that we said that we could enter, I think, okay, all right. I'm just going to go back here. So the other way that you can enter from these zones, right? And as I say, this might not be the most optimal way to do it, is with a bullish engulfing, right? Now, what do I mean by that? This previous candle, so this candle here, the body of the candle, the entire thing gets engulfed by the next candle. So this here would be another validation for us to get in here, right? A riskier entry, don't get me wrong, a market structure shift here would be better. Now, maybe there is one on the 1 minute, okay? But I can't take it because what I'm trading off is a 1 hour area, right? And as per a 1 hour level, I can only use a 5 minute entry, okay? So I can go ahead and enter this because I've got a bullish engulfing. And as I said here, engulfing candles are another way that we can enter these trades, okay? So I'm going to go ahead and plot this and have this as an entry, right? And where would be my targets? Let's work this out, right? So potentially I would look to trade up to this high, all right? As we kind of have no imbalance in this area, right? We had this area of supply here. This area of supply kind of got invalidated because the price got through here. So the next area of possible supply would be here, right? This candle right here, it's got the fair value gap or the imbalance before it, right? Price never quite reached it. So that to me looks like a good target to have there, all right? Let's go ahead and just enter this on 1% risk and we'll see how much money we can make by the end. Okay, so let's play this out. Maybe we go straight there. All right, we're still validating our bullish thesis because we are just breaking above these highs. And everything in between here is just noise to me, right? I don't care what happens in between. It's all just noise. I've got my plan. I'm going to stick to it. All right, but what I'm going to do is I'm going to watch the 15-minute and look for supply and demand zones on the way up, right? So what happened here, for example, right? This candle broke this high, okay? So then what forms here? An area of demand. Right? Is it a high probability one? No, it's not, but maybe price will respect it. Price does end up taking out this low, which ends up being our inducement, and then we continue higher. Let's see how this plays though. Yeah, okay. Looks much better. Okay, and we end up getting our target on that one. But what I noticed happened here is now obviously I still think the buyers are in control. So now where is my next area of supply and demand, right? My next area of demand is this candle here, the bearish candle before the strong impulsive move up. And what helps is this strong impulsive move up took out this low before. So here is our liquidity sweep, right? And we have this big void beforehand. So now here is our big sort of imbalance and fair value gap. So this now meets our criteria for high probability area of demand, right? And now we've met this area. This is kind of target hit. And our next target would be up here, right? And we broke above this high. The body of the candle actually broke above this high. So that tells me that we are still in bullish market structure and we can still look to continue this higher. So higher high, higher low, right? Higher high, looking for that higher low to get put in and then go higher. So let's see if price can trade back to this zone for us. Ideally, we want to see some kind of inducement get built. So accumulation of orders that we can quickly take out before the move. Price trades around. As I say, all of this is all noise. Okay. What do I mean by inducement? Okay. What I mean by inducement is kind of early buyers and early sellers getting trapped. Okay. So all of this here, all of this right here is accumulation. Okay. All of it, right? Even this low here, right? This is basically a sign for us that buyers and sellers here are all getting trapped, right? And there's a lot of orders just basically being exchanged left, right, left, right, left, right. What we want to see just before our supply and demand zone is this, right? We want to see this kind of thing happen. So if we're in a sell, right, we would actually like to see this. This is what you want to look for. This is your pattern. So here's your area of supply. This would be your inducement, right? Your early sellers or early buyers. So maybe this is an area of supply here, right? And this is where everyone kind of sells early. They sell here, they get taken out, and then we tap into this upper level here, right? And you can identify this because, right, it doesn't meet the criteria. It doesn't have a gap before. It doesn't sweep the last high, right? All of those kind of things make it lower probability, okay? As I say, we're going to have tons more examples, so don't worry. This might even here provide us a pretty good example. Okay, so we're inside this area now. So this is a 1 hour area. So we want to look for a 5-minute market structure shift. Let's see if we get one. Okay, there's our 5-minute market structure shift because we closed above this high. Now, just keeping in mind market structure, okay? So what works on the higher time frame works on the lower time frame. Lower lows, higher highs, lower lows. All of a sudden, we make a higher high. And now we're expecting a higher low to make a higher high. So we can enter off this fair value gap here if it forms. Okay, even better, right? So here is our area of supply that caused demand, that caused this breaker structure. So let's go ahead and enter here, stop loss below the low. And we'll go ahead and target all the way up here. And we'll move to break even at this area here, just to be safe, because this is an area of supply right here. And it also has a level of imbalance before it. So we're just going to protect our capital and go break even once price hits there. Let's see. Okay, so now we go break even. And you would possibly, realistically, you might want to take partials at this high or this high, right? Just to kind of get you guys into some trade management here. Obviously, what we're doing here is we're shooting for these big multiple trades, right? But it's always good to take partials. So the person that asked, but now we don't have imbalance, do we? The imbalance is to define our high probability, higher time frame areas, such as this, right? That confirms our POIs. The lower time frame, we don't have to be as strict as it. All we need is a simple market structure shift, okay? Okay, so let's look to take a partial here. Partial close, 50%, nice and easy. And let's just skip this through. So it ends up taking us up break even. Let's see what happened if this zone ever gets invalidated or ends up going all the way. Ends up taking out this low. So that is a pretty nice inducement. And the way to kind of define like a really nice inducement is if I come onto this chart and let's just rewind here, right? And you see this wick here. Doesn't this wick to you look extremely obvious? Like when you jump on this chart and you look at it, doesn't it just stick out like a sore eye? Like you think that is so like blatantly obvious. Like what's that doing there? That is a way to kind of identify a high probability sort of liquidity sweep or level of inducement, right? These wicks that almost look too obvious, more often than not, will get taken out, right? And just to kind of show you that here, This wick right here looked extremely obvious, right? Just kind of stuck out. So did this one here, right? This one here stuck out. So then it got taken, right? This one here then got left behind, another sort of standout wick. Then it got taken and the move happened, right? So that is one way to kind of identify those. But that will come with experience and sort of chart time and backtesting, all that kind of good stuff. So here, it doesn't quite break. I would like to see possibly break above there just for that extra confirmation. Okay, I missed an entry here. No worries. Right, we end up retesting this zone. We have this inducement here, right? But it ends up just kind of going up without us here. So what happened here? Look at this, guys. So we can see here, this area of demand got created, tap in, and then we end up pushing away. But I did, in fact, miss the entry here. All right, what happens here? This area of demand here that broke the structure, that's back in and it gets respected, right? And then it ends up pushing up. Is it going to go all the way to our TP without us? Let's have a look. All right, same thing here. This area of demand gets formed, price taps into it, and we keep going up until our higher time frame POI, which then does get taken. Okay. So now where do we look for our next trade? So at this point, I'm kind of looking at our next trade to be this 4-hour gap here, or 4-hour gap, sorry, 4-hour area of supply. So what I'm going to do is go and clear my chart here and get a fresh kind of outlook, right? So this is my 4-hour area. This is a high probability area. Why? Okay, step one. We had this liquidity sweep here. This high got taken out, all right? What did we also do? We respected this level of imbalance here, okay? So, and then we had a strong move down that broke structure, right? We have this imbalance or this kind of fair value gap right here before the level of supply, high probability area of supply. So let's go ahead and wait for price to tap in. Now, what do we also need to remember considering this is a 4-hour area of supply, right? So if we are going to enter off this, what do we need to remember, guys? Let's see if anyone in the chat can guess it. This is a 4-hour area of supply. So if I want to enter off this area of supply, what do I need to remember? I'm going to see if anyone in here can guess it before I announce it. Let's see. No takers? Okay. All right. 15-minute entry. Yes, guys did get it. You guys got it. All right, good stuff. So we can only enter on the 15 minutes. So there's no point me even looking on the 5-minute chart. Okay, let's go ahead and see what we get here. Okay, so I'm waiting for a 15-minute confirmation here, and let's see if I get one. Okay, so what do we have here? I think we might have just missed an entry here. So we have this here, right? And just kind of getting into this, right? Here's our breaker structure here, right? This one is kind of slightly harder to spot. Then what do we have here? We have an area of supply. What do we have on this area of supply? Okay. We have, it took out this high, right? So there's our liquidity sweep. We formed a fair value gap. We formed an imbalance here. Okay. This is probably going to be a pretty good entry to go short. Now we obviously have got a pretty late entry on this. Should have got it on the retrace, but it is what it is. And where am I going to trade this to? Okay, cool. What can I see? Where's my next high probability area of demand that I could trade this to? This 30-minute gap, this 30-minute area of demand. Why? It's got the imbalance before. It swept out these lows before it went up, okay? So this makes this a high probability area of demand. So I'm almost going to play ping pong between these areas of supply and demand. I'm trading from supply to demand. I'm trading from demand to supply, right? Just playing ping pong between the zones that are higher probability. So here we go, all right? We can look for this short here. Let's go ahead and hit sell. And we could possibly even look, because we are coming out of a 4-hour area right here, right? So we could look to trade this. So the next 4-hour area of demand is here. That kind of lines up as well. But we could also look to trade this all the way down to here eventually. Okay, not going to do that because that's just not realistic. And we'll just take our trade here. All right. In reality, have I got the balls in real life to trade it all the way down there? Probably not. How do you determine where to put your stop? You put it above the supply or demand level. Okay. So this is my area of supply. So my stop goes above that level. Okay. So let's go ahead and see how this one plays out. All right. So just to kind of reiterate for this is now broke structure with displacement. So this becomes our level of supply right here now. Okay. All right. Now this broke structure. So now this is the supply that's in control. Chop around. And we do end up getting there. Okay. So now where do we want to look for from here? Okay. So now we're in a 30-minute area. So we could look for a 5-minute confirmation out of here to then possibly continue long. But I want to be cautious because overall on the 4-hour, I am in kind of a bearish market structure. So there is a balance to find between sort of, you know, your higher time frame structure and your lower time frame structure. So overall, I am bearish, right? So I want to be cautious about taking any long positions here. I'll probably wait for a 15-minute confirmation. All right, and we do end up just continuing down. Mess about a bit here. Right, holding this zone though. This zone here is still in control for now. It's not been invalidated. Okay, so this is nice. This kind of now confirms that this zone here that was holding, this 30-minute zone here that was holding well, is now being invalidated, and this 15-minute is holding, okay? So now, right? So now here, this 15-minute is holding, so that tells me the sellers are still in control. So we broke structure here, the body of the candle closed below, all right? So now where do we go? Can you darken your supply and demand rectangles? Yes, I can. Apologies. I will go ahead. What color would you like? Let's have, should we go for, turn the opacity up? And we'll go for this kind of gray color here, okay? And we'll clear off all these other zones just to make it nice for you to see. All right. So now we're looking for a retest into here. Now, where would I enter in this scenario? Because there's an imbalance and there's a sort of fair value gap here, or this level of imbalance, I would actually want to enter from here. And this technically, this is getting a lot more complicated into it from what we have today. But this bearish candle here would actually be my area of supply. But I will do an advanced supply and demand webinar and explain why that is another time. All right, but for now, we'll just remain to continue to use that this 15-minute bullish candle before the bearish move down is the area of supply. So we'll go ahead and set our entry there. And we'll look to trade this down to here, right? Because where is my next highest probability area of supply and demand? Where do I get to play ping pong to? I get to play ping pong to this area, right? We have the imbalance before. It took out these lows. So there is a good chance that we could react off this level. So let's see if we can pull back and get our entry. We'll go ahead and set this as a limit. Sell. Don't. That's not the right entry. Apologies, guys. Where are we? So limit. Sell. Is that correct? Yes. Perfect. Okay. Let's see if we get tap back in. Nothing yet, but I like this because then this becomes our inducement. This makes me even higher probability in my trade. Is it going to, might even run without us? No. Okay. So we get tagged in there. Does mess around a little bit, but it does end up selling off. Okay. We break this low. Should be good to go. This now here becomes our next area of supply. Massive, massive area though. So not something I'd be interested in. But we do end up just retesting into it, tapping into it, and then we get our take profit there. Okay. So there's that example. So now where's in control? Right. Now we have to wait and see how price reacts off this area of demand. Overall on the higher time frame, still very bearish, but I still want to see, just to play it safe, how we'll react off this level. So let's go ahead and see. So this is a, what is this? A 15-minute level. So let's wait and see if we get a 5-minute breaker structure or something. No, okay, so this whole zone kind of gets invalidated here. So I would believe that we're still in control. However, there is this bullish area of demand right here that we used earlier. So I also want to see prices break below that to give me that extra confirmation. But for now, looking on the 1 hour, this is our area of supply that's in control. So to be honest, I'm looking for some kind of pullback into here and then the continuation down like so, okay? Just keeping in mind my higher time frame bias. So do we actually get some 5-minute? Might be able to do a bit of ping pong action here. No. Yeah. Okay. I don't think we're going to get anything from here, really. No, okay. All right, I'm going to fast forward because it's like 11 p.m. on Sunday on this day. So let's open up Monday and see what we get. So we end up invalidating this zone. So that does tell me that we're going to continue this bearish momentum to the downside for now. We ever get, okay, so we do tap back into our area now. So let's look for a 5-minute entry and see if we can get that. Okay, so we do get our breaker structure here, right? And I would probably class this whole thing right here. So with this strategy, don't actually need to use key zones or perfect times of trading, but the highest probability times to obviously trade are going to be London session and New York session, just because that's where the most volume, right? So if we look at this, for example, here, if we look at this and the time was midnight till, 9 a.m. here, right? Price didn't actually start moving until London session opened. So it was just chop, 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 chop. London session opened, right? So ideally, yes, you would want to trade this in London and New York session, as that's where you're going to get the most volume and the most consistency in your setups. So can we get a retrace to give us an entry here? Okay, so this is technically in our zone. So I would argue this is valid, and I would, yeah, we'll take it. We'll take it. We will be fair to the system. So let's go ahead and draw this up. Just put a stop loss above this high. And our first target will be down here at this low. And we want to sell this as market and hit sell. Okay, so that one we end up getting stopped up straight away. But again, very normal, right? Maybe I'm wrong about kind of who's in control here. So if we can close back above this, then I would argue that the buyers are back in control. So let's see. Okay, so we closed above this recent swing high. So I would now argue that the buyers are back in control, and I could look for buys from this area here. Okay, so let's go ahead and see. Oh, so I could refine this and use this 15-minute down here would be a lot nicer, I would say, right? A lot better for me. So now we just kind of wait for some retracement. Now I see that the buyers are in control, right? So now we go ahead and look for our buy setup. So price ends up kind of moving about us, I could argue that this is now the demand in control, but the close above this wasn't exactly very clean, okay? So I'm not going to go ahead and argue that. Right, does end up getting held, it looks like. Just waiting for something clean, So I'm waiting for a clean break above this high and possibly a new demand to get formed. Okay, that's a clean break above the high. I like that. So this is the 15-minute area that has had caused that aggressive move to the upside and put us in control, okay? We could look to take something to this high. Let's have a look what we've got here. right? We do have a nice 5-minute area here. So this is a 15-minute area, so we want to enter on the 1 minute. So we're going to wait for confirmation on the 1 minute if we can tap back into there. Okay, so we tap back in. We need some confirmation on the 1 minute for us to get into this. Okay, there's our confirmation. We closed above this recent swing high. So now we can possibly get back in around here. Stop loss TP. We'll hit buy. Speed this up and see if we get some follow through here. We do end up pushing up there. We'll go break even. And here you'd probably normally take a partial. And we do end up hitting our target there. Okay, so where's our next area that price could stall, right? So that's fine. Like, just to kind of clarify here, right? So here we were pretty confident that the sellers were in control here. Okay, we had this area of supply, and we thought the sellers were in control here. Okay, and we were looking at market structure. We were kind of like, okay, lower lows, lower highs, lower lows, lower highs, lower lows. Ended up failing. We took a loss there. Completely fine, right? We took a valid loss there, but then what did we realize? We then realized we were wrong. The buyers were in control. Then we ended up looking for a long position, and we get a trade which is, 4 or 5R, right? And we make back 4 or 5 times our loss there. Okay. So where's our next area to look at? So price is just closed above there. Our next area of supply that we can possibly look for a price to trade to is up here. Let's wait for price to get up there and see what happens. Okay, so we get some weird action here. Okay, all right, fine. So there was clearly some news here, but following the sort of the process from that area, price never closed above it, so it's still valid. We have a 5-minute breaker structure here, right? And I like down here to target. So where could our possible targets be? I like that all of this here is potential inducement. So all of this is potential liquidity for then us to tap into this hourly gap that we marked here, right? So I'm kind of just looking to play this ping pong move back down to here. So our area of supply to enter on the 5-minute would be this down candle here, because this is the bullish candle that caused the break of structure. Okay. I'm going to go ahead and set a limit here. Just put my stop loss slightly above. I take profit down here. And this is a limit. All right, we'll go ahead, press sell. Okay, ends up just hitting that without us. I now don't like this as much. Didn't quite tap the area of demand though. So this here could be the inducement before. So I'm going to leave it. All right. So this could just be early buyers, and this is the move to stop them out. Get tagged in. Ends up pushing down. Not super confident here. So I'm going to go break even just in case, because this area of demand here looks like it could hold. If I am wrong anyway. Okay, let's speed this up. They're a slow one. Okay, and we do end up getting our target there. So good stuff. But realistically, in real life, are you holding that? That's a long old hold, right? Has anyone got any questions so far? Has anyone got anything they're unsure of? Just want to check in with you guys because it's been a minute. How are we doing in here? We've got 206 of you in here right now. Guys, if you could, obviously just go ahead and, go ahead and like the stream. There's only 62 likes in here and there's 206 of you learning in here at the moment, right? So if you could go ahead and just show some support and like the stream, that would be massively appreciated. Okay, can you go over the confirmations again? Win rate and R multiple depends. It also depends on how good you are at kind of spotting basic market structure. But this was kind of the first strategy that I used to kind of get myself profitable. Win rate varies between 60 to 80%, depending on the asset that you're trading and the time of year. So, for example, things like gold or Forex, for example, GU, EU, it has a higher win rate on versus something like NQ, for example, right? Can you summarize? For high time frame bias, we only look for 4 hours. So you're looking at the 4 hour, sort of 1 hour, okay? 5-minute demand and supply are important. They're important areas to enter from, right? So you can look at those areas to enter from those areas and then sort of continue. So in this example, I had my 1 hour area, but I entered my 5-minute area of supply for my entry, right? Do you target areas in the same time frame as the entry? Good question. Yes, I would recommend that if you enter off a 1 hour area, play ping pong, right, with the other 1 hour area. Can you use this strategy as a scalper? Yes, you can. As I say, what price is fractal. What works on the 1 hour, 4 hour works on the 1 minute, 2 minute. How do you spot fake breakup structure? Good question. If, for example, with a breaker structure, let's have a look at this, right? We have this breaker structure here, right? But above this breaker structure up here, right, we have this area of or above all the way up here, let's say, right? We have, so this is a breaker structure to the downside, okay? But let's say up here, we have an area of supply that we're looking to obviously price to come up to, okay? And in front of this, we have lots of imbalance, right? Price off more often than not is going to want to come back and fill up this imbalance. So this is kind of how we know that this potentially is our inducement for this area, right? But it also does take experience and kind of getting used to it, right? But that's kind of like a, yeah. Will there be a recording to review? Yes, there will. This will be available completely to rewatch at the end of the stream once we're finished here. Can you go over the confirmations again? Okay, so the confirmations, they are in this document. And if you guys aren't in the Discord, what I'm going to go ahead and do is post these inside the Discord. So these are your confirmations, what you're looking for, kind of the patterns. So here's the Discord link. Go ahead and join the Discord. And I will post this PDF and all of the entry models and like confirmations and everything from today in the Discord. Can we use 5-minute supply and demand and 1 minute confirmation, or the time frame is too short? Yes, you can. That does work, but you might not always get presented the entry. Can you mention in process using footprint adds to this process? So yes, say for example, we were using a supply and demand area like we are here, right? And we're looking at these supply and demand areas and sort of like being like, oh, okay, like how would I use footprints to get into this? You would say, for example, look at your 1 hour area of supply and demand. So in this case, we have this area of supply, and we would look at footprint chart, and we would look for all of our standard confirmations on a footprint chart. So for example, a shift in the delta, we would look for like zero print, that kind of thing, right? I'm not actually an order flow trader, but Newman is. But these are essentially your key areas, your key POIs, your key areas of interest. And then you look for your entries on a footprint chart or book map or whatever it may be. Do you set limits or prefer to wait for confirmation on this? You can do either. It's up to your preference. So for example, just going into this a little bit. So let's say there's 200 of you in here, right? And if all of you were to go ahead and take this strategy, would you all trade it the same, do you think? Right? The answer is no, because everyone has different psychology. Everyone has different risk tolerance. Some people aren't as patient as others. So some people aren't able to kind of, like wait for that confirmation. So there'll be some of you that might just draw out this 1 hour area of supply and simply just enter as it hits it if it's a high probability area of supply, rather than waiting for the lower time frame confirmation. There's some of you that would be more risk adverse and need that extra confirmation on the 5 minute, then the 1 minute, right? And you keep getting that confirmation until eventually you're finally happy with that. So again, it's kind of up to preference. one more thing until candle close for supply and demand. Oh, guys, as well, we're really trying to, obviously, with the YouTube, we're trying to grow the YouTube. So please, if you're not subscribed to the TradeZella YouTube channel, please make sure to subscribe. We have backtesting sessions, constantly like this. We have psychology sessions, tons of video, tons of content coming out for you guys. So you do not want to miss any of that. So please go ahead and make sure to hit subscribe to the channel right now, just to make sure you catch all of that, right? One more thing until the candle close for supply and demand, we will not take it. Until the candle close for supply and demand, we will not take it as POI as invalid. Yes, that's correct. Can you open up SPY's chart today and see how you would analyze that chart? Yeah, sure. Using this strategy specifically. So let's say the SPY version would be ES, right? So the SPY version would be ES. So I'm just going to do ES, right? And I haven't looked at ES once today in terms of the actual chart. But in terms of how I would have looked at this, there's not really much to go off here currently. So I would have looked at this and seen like this technically as my area of demand. This would have been an area of demand. This now also here would be an area of demand. And we are looking to break structure above this high. So with this strategy today, to be honest, on ES, I don't think you would have caught any trades. Potentially here, looking at this, right? We have this 15-minute area of demand right here that we're bouncing off. So this might have been the only possible thing you saw on ES today using this strategy, right? So not every day is going to present an opportunity for you in terms of like this selling. And the thing is, like, each pair or asset has different characteristics and traits. So for example, NQ and ES, you might be less inclined to wait for an entry model because NQ and S moves a lot quicker than, say, EU and GU. And because of that, you might not be able to wait for that entry model or that retracement. You might just have to get in because, it moves a lot quicker. It runs the targets faster. It takes out liquidity quicker. So you're unlikely to get that retracement. Whereas something like GU and EU, it's very easy to get these retracements to these zones, right? But yeah, poor example, wasn't much availability there. The link takes me to Discord, but I can't find the charts. I'll post them after this session is done. When do you move your stop loss? Whenever a key swing low is taken out. So for example, let's say I was looking at this, my key swing low is here. If I wanted to carry and hold this runner on and on and on, I would go break even here as we could potentially reverse after taking out this low, right? And we do actually end up tapping all the way down to this 15-minute. Which time frame gives you a higher win ratio, like 15-minute, 1 minute versus 4 hour, 15-minute? That is for you guys to backtest and find out. I have given you the playbook. I have given you the system. Up to you guys to put in the work, backtest, and find all of that out. Do you start down with top-down analysis or search for good zones on all time frames? Yeah, so you'd start on the 4 hour, for example. You would look at your zones on the 4 hour, and then you would go down from there and sort of top-down analysis. So like at the start of this session, for example, I had these 2 4-hour zones, right, that I marked out, and it was this one and this one, okay? And I kind of just wanted to play it because we weren't at either of those zones, right? Then what I'm doing is I'm just kind of playing ping pong on the lower time frame between all these lower time frame zones to these zones. So for example, here I'm in like kind of this range. So I'm just playing ping pong of supply and demand zones on the lower time frame towards my higher time frame areas, if that makes sense. Okay. No worries. No worries. Okay. Right. We will do like 2 more trades and then we'll kind of look to wrap this one up. Okay, so I'm looking at this and I still think the bears are in control. So let's just play this out, kind of see what we get here. So we have this 1 hour area that's formed. Okay, so this ends up, the body of the candle ends up aggressively closing below this low right here. So we've got this breaker structure right here. So then this, I'm just going to clear this chart because it's getting a bit messy. Right, this is our area of supply at the moment. We broke this low, so we could possibly look for some kind of trade out of this. We have this series of candles here on the 15-minute. And we have this fair value gap before these series of candles. So let's wait and see if price can tap into that. And we can possibly get a 1 minute entry out of this because this is a 15-minute zone here. Let's see. So we end up just kind of selling off without tapping there. I think I drew it wrong. So it's this whole entire, because it's the wicks as well, right? This would be like a lower probability trade, but I still think one that will play out. So let's go ahead and enter here, right? And we had our confirmation here. This is our breaker structure. Let's see if it can pull back a little bit for us. So it does end up pulling back there. So this is where I want to get in at this fair value gap here. And we'll just put our stop loss all the way above the high. And you want to put your stop loss above the lower time frame supply or demand. So in this case, supply. So where is that supply, right? It's here, this area. If I go on to the 2 minute or the 3 minute, or even the 5 minute, it'll be a lot clearer, right? Then obviously on this 1 minute zone. So you want to put your stop loss above that high. And then we can look to ride this down to this 1 minute area of demand, as I kind of say, looking to play ping pong here. So this might be kind of how you scalp, right? Just to show you a scalping example here. That's a limit. All right, so let's press sell. And that quickly goes to TP, and we can take our profit there. All right, is this going to go potentially lower? Probably, because we're actually bouncing out of a 1 hour area. So where is our next area to tap into? And we've got this 1 hour area down here. So we could look to go slightly lower, which then it does end up completely selling off. And this now kind of just gives you that full confirmation that this 4 hour POI is in control. And we will likely run down to this 4 hour down here. And we'll finish on this. Does it? Let's see. Yeah, it starts aggressively selling. And it does eventually get to our sort of 4 hour POI. And we sort of played that ping pong game from this 4 hour supply to this 4 hour demand. All right, guys. I'm going to wrap that up there for this webinar. But so far in this backtesting session, we made 19% profit. So if we just come to this backtesting session and we just go here. So we had an 87.5% win rate. We made 19%. We won 87.5% of our trades. We only took 8 trades though. Day win of 80% and the average win to loss ratio of 2.65%. But as I say, I've personally used this strategy over multiple years, and it was the first strategy that I ever sort of used to kind of get profitable. So yeah, it does kind of work, and I can attest to that. Right. As I said, I'm going to put the PDF here on how to draw these zones, how to identify high probability zones in the Discord. So that is in the Discord webinar chat right now. So if you guys are unsure and you want that PDF, go ahead and check that out. All right. Did you guys enjoy this session today? All right. And as I say, right, please, please, please make sure to go ahead and like the stream. Make sure to go ahead and subscribe to the TradeZella channel, right? So we can go ahead and give you more of these sessions. You subscribing, you liking the stream gives us that feedback that we need to obviously continue to do these. Cool, guys. I'm glad you all enjoyed. Yeah, so that PDF is inside the Discord webinar chat inside Discord. I'll go ahead and tag that here. So you will get the notification. PDF. Cool, guys. Does volume help in supply and demand trading? Yes, it does. All right, everyone, have a good evening. Thank you all for attending, and I hope you all have a good evening, and I will see you